Hi, it's David here with Future Trading. I want to say thank you to you guys that watch the videos. Thank you so much, and for the like and the follow. Thank you, my friend. I'm glad you found the information informative. I see you participated again. I'm making a three-part series just today. Kind of like what I did this weekend, but no one showed up for, of course, the third one. So, and again, I actually was stressing the range in here, which if you went back and saw it, you'll see the biggest moves coming from that range in Bitcoin. You would have seen it, but nevertheless, here's the third video. And again, I'm glad you guys took a look. Now, again, if I got followers, which I do believe I have some, I believe that y'all may want to go ahead and hit the like button a little bit more because, again, this is information that's meant to try to get you wherever it is you want to go. And I'm going to go over the reason why you want to hit the like button. I'm going to go over that because it's really important that you see it. Now, the information, if you want to find it, let's say if you want to come back and find it, say you want to just learn a little bit more after you're done profiting from me, you can find, of course, this video and, of course, the other two that I shot today. You can find that here. All right. So I don't want to bore you. Now, let me go ahead and give you what you want so you can be on your way if you're just here to profit and you don't care about nothing else. Now, price action, consecutive close. I released this a month ago. Now, let's take a look at the chart. Now, this is not exactly the NQ chart, it's the MNQ, but then we're going to look at the NQ chart. We are. So I just wanted to outline this because this is important too. The micro, if you were trading the micro, the low of this is 11. All right, so 15,611. And the low of this bar here is 1511 and a quarter. So within one tick. Now I know you're probably saying, well, why are you showing me this? And now we're gonna go to the other chart. All right. So and do notice, again, here come the response up at that price level that I told you was important and today and possibly tomorrow too. So we're going to talk about all of that. All right. So now this is the chart that I had in front of you earlier. All right. In the other two videos. Now we're going to pick apart this information, then we'll come back here. So because I just showed you, how they dove down. Now here, the low is just a tad bit different. They move different. 11 and a quarter, okay, and then the low here was 10. So they went right outside that low, but there's our demand box and there's the ranges. All right, so all of that information you could have learned a month ago when it comes to this. All right, so there's the two closes, 1, 2 above this bar's high. That's why you see a C under the bar. That's a price action indicator, and I made it. So there's the C there, and you can find C's kind of all over the chart if you want to take a look. It's no gap needed. You don't need no gap, none of that. Matter of fact, the bars don't even have to be the same color. There's two bars here, one red, one green, don't matter. They all close above this bar high. This bar didn't get that behavior, if you notice. So the high here, 697 to close. I don't know why the chart be doing that sometimes. Close 688 and a quarter, kind of sitting away from my computer. Had to lean in just a bit. So they claimed back and closed right beneath that high that could have warned you and told you that some things was changing right at this price level. I told you this morning. All right. So really, really important stuff. I told you that this price level is important today for them to close above as well as tomorrow. You got to see if they'll do it. Am I saying the market is going to reverse? Absolutely not. All I'm just telling you is there's a behavior here. And if you've been following me for any time, you'll know once they make trend distance, they'll lean back, if you know that. So let's talk about this turn back here. So there's your consecutive closes, all the C's under the bars. All right. So now the mid of the turn is important. So here's this bar right here. Now, I don't care about engulfing. Well, this one is, but I don't care about names. I don't care nothing about that stuff. That stuff is really petty. Um, and here's the mid of the bar. You don't want them to close back above that. It's kind of like this behavior down here. If they're going to go down, if you're looking for the short, if they're going to go down, you don't want them to close back above that mid. Now, down here, you had 5 tests of the mid. The mid price is right there, 15.5, 45.75. There's your test of that mid. They didn't close beneath it. That's pretty strong. And then there you go. So you don't want them closing beneath your mids or your reversals. It would really help if they didn't do that. And oftentimes it's your second bar. It's your second bar. It's the open of the second bar higher. It's the open of the second bar lower. I actually have an indicator for that, but I just didn't put it on the chart. It's the open of the second one lower. You can see they went up, tested right between that open and that mid. That's a area of potential, supply in this particular scenario, demand down here, and then that's when you get the fallout. So there's some information for you you can profit from. I wish you all the best with your trading. Take care. Now, for those who want to stick around and actually learn from me, this is some information I want to disclose to you, should I say. So now let's take a look at just a word. And it's related to this information in here too. All right. So now the the first word you'll want to make sure you pay attention to because it has everything to do with me and you, the person that's viewing, and myself. All right. So interdependence. All right. Interdependence is important. The dependence of two or more people or things on each other. All right. So I make the video. I like when you watch the video, because it lets me know that you're finding the information useful. And I like to teach people. That's what I like. I like to do that. It's good to encourage someone to, stop making the choices that they're making and make one that may be a little bit better for them, especially if you're telling them something that could work. So problem solving builds worth. Everything in America, you get paid to solve a problem because you can, of course, you can solve the problem. You go get some money for it. So that's worth. All right. So, but I'm trying to give you something free. Now here you go. Cohesive. Now this is system theory. It deals with it deals with interdependence. Now, of course, dependent, independence, and then interdependence. If you don't understand the function of how to get here, dependent relationships, algos, all kind of work around this whole model. Being dependent, independent, and then interdependency is the supreme approach. All right. So now, system theory. A cohesive groups. And I'm just gonna read this little bit right here. Cohesive. I'm a high school dropout. Let me tell you that now. So if I stumble over a word, do forgive me. Don't count it against me. Just I'm a high school dropout. All right. And I only finished 10th grade. Only finished 10th grade, but I love to read dictionary. All right, so don't count it against me. Cohesive groups of interrelated, interdependent components that can be naturally or human made. Every system has causal boundaries, is influenced by its context, defined by its structure, function, and role, and expressed through its relations with other systems. A system is more than the sum of its parts by expressing synergy or emergent behavior. Changing one component of the system may affect other components or the whole system. It may be possible to predict these changes in pattern or behavior. For systems that learn and adapt, the growth and the degree of adaptation depend upon how well the system is engaged with its environment and other contexts influencing its organization. Now, and I know they got all kinds of algos out here, all kinds of algorithms running the market. Again, that's the institutions, the prop firms, the banks, the hedge funds, the global entities. They got that stuff. That I mean, literally, I mean, they actually, you know, they go after one another with them. So they got that bunch of changing of behaviors, adaptation, and all of that. Yes, them guys got it. All right. So that's why they don't need educators and bubbles. They don't need that stuff. They're working on a far more advanced level of flow. That's what them guys do. And trying to understand that is why I'm here. Now, the 1-2 is a behavior. The mid is a behavior. The trend is a behavior. You can comb through any market, any time frame. This is timeless stuff that I'm talking to you about because I know that this is what they regard. And of course, their intentions are serious. And so I try to work with them. That's interdependency. I try to work with them. I try to work with them. I don't counter trend. That's why I say that approach to me is completely crazy. So I try to work with them. That's what I want to do. I want to work with them. And that's appropriate. That's the way you should be. Now, I don't want you dependent upon me. I want to actually give you information, at least this part, the free stuff, to make sure that you don't have to keep coming to my channel to learn. You don't have to. You can actually make money on your own just using the information I've already released because it's timeless. And so I don't have to make an abundance of videos. And I know I'm not the markets engineer. I'm none of that stuff. All right. I'm not that guy, just not him. All right. So interdependency is important. That's how your relationships work with the person at the grocery store, with the marriage, the mom and daddy, whoever you're interacting with. Interdependency, if and only if they want to work with you. And so me not getting likes, or you don't subscribe, you're just not being interdependent. You'll look at my information, take my ideas, and go without being considerate and of course maturing and being supportive of what it is that I'm doing. So just wanted to make sure I put that there for you. And again, you got to be versatile in these markets, and versatility is a part of number 3. And I'm not going to dive into all of that, but you got to be versatile. You got to know when the price level is important, when to back off and don't go that way anymore. And hopefully this information right here will help you be able to accomplish that. So there's that price level I told you today, maybe even tomorrow, see if they can close above it. So I wish you all the best with your trading. Take care.